Bitcoin is at $21,000. Now, isn't it ironic how our sentiments change? Almost 2 years ago, Bitcoin was at these same prices. The internet was going wild. YouTube and Twitter was blowing up. We were hitting all-time highs on top of all-time highs. We all forecasted ourselves sailing on the Pacific Ocean with our multi-million-dollar yacht with a custom-made Bitcoin figurehead. We were all going to be crypto millionaires. 2 years on, Bitcoin is in the 20,000s again, but our mood has shifted. YouTube and Twitter are blowing up again, but for the wrong reasons. There's now talk of Bitcoin dying, it's going to zero, Bitcoin needs to be replaced, it's a scam, we should all jump ship before it's too late. I've been there. I've experienced a collapse like this in 2018. As a matter of fact, it was even more horrific then, but I stuck around, and that is exactly how I made a lot of money in this space. With that said, my name is Joseph and welcome back to my channel. Now feel free to hit that like and subscribe button, plus also ring that bell if you don't want to miss any of my content. Remember as well, I am not a financial advisor. I didn't study financial advisory courses at Harvard or UA, so don't take what I say as financial advice. Just a regular guy that loves crypto. Now let's dive in. There will be a lot of millionaires made in the next bull cycle, and you can be one of them provided you have the patience. Now I want to share with you 6 points that I believe may help you in your investment journey. The first point I want to bring to your attention is time in the market. One of the main reasons why most investors lose money is because they're timing the market rather than time in the market. Most investors, they're so caught up with trying to squeeze every bit of profit out of the market by buying at the cheapest price possible and selling at the highest price possible. Now, don't get me wrong, that's the winning formula. Buy low, sell high. No, the problem with that is we aren't psychics. We cannot predict the low of the market nor the high of the market. We don't know the market's bottom nor the market's top, so we are all just speculating, and that speculation is oftentimes is driven by emotions, which eventually leads to erratic investment decisions. You see, most investors, they will throw some funds at an asset, and when that asset starts to collapse, they will tell themselves that hey, it will be rebounding soon, it will turn around again. It's just a matter of time, and the assets keep falling and falling until eventually they have an epiphany and say, okay, I'm going to pull out my money now, and they pull out their funds at a loss, and then the market starts to rebound and the market starts climbing again, and they're telling themselves that nah, it's not going up, it's going to fall again, and it continues to rise and rise, and eventually they have another epiphany that the market is going away from them, so they start to chase the market and they end up buying at a higher price, buying at the top, and then the market just collapses again and the cycle continues, and eventually most investors are left with nothing. So it's all speculation when you're trying to time the market rather than having a time in the market. But most persons may say, well, isn't stocks and crypto all about speculation? Well, even though I might agree with that, put it this way, let's use Bitcoin for example. If I believe that Bitcoin, considering the asset that it is, in 10 years will give me 2000% on my money, well, isn't that a speculation that I will love to take part in? Of course. All I will do right now on this day is invest my money in Bitcoin, and in 10 years time I will get over 2000% interest on my funds, right? Instead of trying to predict the highs and low of Bitcoin Bitcoin cycle throughout those 10 years. Now, most investors who have time in the market oftentimes makes more than those who are timing the market. No, I'm not saying that you cannot make money by trying to time the market. You can. I'm just saying that if you wish to time the market, at least allocate majority of your portfolio as a time in the market. So you should have at least 80% of your portfolio for the long term. You're looking at 5, 10, 15 years. And that 10% or 20% that is left, you can try to play around with that, try to time the market, trying to get better and better at your investment strategies. The next point I want to talk about is dollar cost averaging. Now, what is dollar cost averaging? Now, dollar cost averaging is the practice of investing a certain amount of funds, whether fixed or unfixed, at regular intervals, be it weekly, bi-weekly, monthly, whatever floats your boat. How that works is that, let's say for example you have $100,000 and you want to invest that $100,000. Now, instead of taking that 100,000 and throwing it at the first coin that you see, or the various coins, all at once, what you do is break it down into portions and invest at various times regardless of the price of the asset. So let's say for example Bitcoin now is at $21,000. So you would take, like, say $10,000, invest in Bitcoin today. Now, next week Bitcoin goes to 25,000. You take another 10,000, you invest in it. The third week, Bitcoin maybe drops to about 19,000. You maybe take another 10,000, invest in it again. Bitcoin drops to 15,000. You take maybe 20,000 this time, invest in it. Bitcoin goes up to 30,000. You take another 10,000, invest in it, and so on and so forth. Over time, this actually could help to reduce your cost averaging per coin or shares if you're into stocks, compared to what you would have actually got it for if you had bought it all at once. It also helps to reduce or to completely eliminate stress and emotions from your investment, overall molding you into a better investor as you are following a particular strategy. Now, the third point I want to get into is called IDOs or IEOs. Now, what are IDOs? What are IEOs? So can you imagine investing into all these coins before they hit the market? I'm talking about investing them into from they were in their root stages. The day that the coin was created, you had invested into them. You would be swimming in cash now. But alas, we aren't psychic, so we cannot predict that. However, there are platforms out there that can actually assist you in finding those potential blockbuster projects before they are introduced to the market. So what are initial DEX offerings? So initial DEX offerings are tokens that represent any type of asset hosted on a decentralized exchange. An IDO is when a project launches a token through a decentralized liquidity exchange. And also an IEO, or initial exchange offering, is when a project launches a token through a centralized exchange. What had happened in 2017 during the ICO craze? Whenever a project wanted to raise funds for their company, what they would normally require is for the user to send funds directly to the project's address, and in turn the project will send the user the native token. But this came with a lot of risks, and 99% of those ICOs, those projects, were all scams. And this caused the US government to did a major clampdown on all ICOs, and eventually the ICO craze died out and they went obsolete. So nowadays, companies looking to raise funds for their project normally do a IDO or an IEO, or ultimately requests assistance from certain platforms like Polka Starter and BSC Pod, for example. Say for example a company wants to do a IDO on Binance, so they would approach Binance, of course, and after fulfilling certain criteria they'll be accepted and listed as an IDO on the Binance exchange. Now, what does that mean for the user? In order to participate in this IDO is you normally would have to have bought some of the host's tokens, which is Binance. So you need to hold certain amount of the Binance token and probably stake certain of the Binance token in order to participate in this IDO. This normally allows you to either be airdropped the IDO tokens or give you a allotment for you to purchase in that IDO. This can be very rewarding, as when Binance does an IDO it's normally very successful. So I think it's worthwhile to check out. I think I'll leave some links to these IDOs and these launchers in the description box below, so you can check out in your own time. The next point I want to talk about is allocation. Don't store all your eggs in one basket. That cliche holds true for a lot of things in life, and the same can be said about investment. What I like to do is, whenever I make a substantial amount of money in crypto, I like to transfer it over into the stock market, and that being the Jamaica Stock Exchange, as there are a lot of undervalued assets on the market right now. Even recently a IPO came out, Dollar Financials, which did a 250% since its listing. So there are a number of undervalued stocks. Certain stocks are poised to do a stock split, which normally increases the price exponentially. So that's a good option you can have in your repertoire of investment skills. You should always be looking to allocate your funds. Eventually I want to make my way into the real estate, but for now I am settling with the stock exchange. Now the fifth point I want to talk about is funds on standby. No, it makes no sense that whenever the market depreciates or is on discount that you don't have any funds on standby to buy into the market. Case in point, now that Bitcoin is now on a small discount, if you don't have the funds, available funds to buy, then you'll be missing out on a grand opportunity, because these prices oftentimes don't last long. Now, if you have the funds on standby now, you can simply buy into the market now. Whenever you make a profit, you simply withdraw that money and replenish your reserve, again ready for another discount on the market. So remember to always keep some extra funds just on reserve, waiting for discounts in the market. Now the sixth and final point I want to bring forward is rewards. Always remember to reward yourself, whether weekly, monthly, whatever the case may be. Your mental health will thank you. If you see that new shoes that you want, go out and get it. If you see that new game, that new FIFA, that new Madden, go out and get it. Whatever it is that makes you at ease, that gives you peace and tranquility, go out and get it. Take that week off, take the weekend off, enjoy yourself. As we say in Jamaica, go out, brav. Don't spend time slumping over the chair trying to catch that perfect trade on the market. The market has been here before you and it will be after you. It does its own thing. So go out and enjoy yourself, guys and gals. That ends my rant on this video. I hope you have found value in it. I hope you will put these 6 points to good use, and I hope it makes you into a better investor and overall a better person. So I'll see you in my next video, guys. Peace.